Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Metals meltdown. Gold and silver continue to plunge, adding to steep losses seen on Friday. Asian stocks and Nasdaq futures slump on concerns around AI funding and valuations. Meanwhile, the dollar holds on to gains after President Trump nominated Kevin Warsh as the next Federal Reserve Chair. Plus, oil tanks as geopolitical risk recedes after the US president says Washington is talking with Iran. Well, a very happy Monday. Welcome to February, and that bloodbath that we saw in precious metals on Friday continues this morning. We've got gold nearly at $4,500 an ounce. Remember, it was at $5,500 an ounce last week, down 6.7% at the moment. Of course, these extreme moves didn't start with President Trump picking Kevin Warsh as Fed chair, but it really did trigger the more extreme volatility. The Bloomberg Dollar Spot Index is a touch higher this morning, but keep an eye on the futures picture. Nasdaq futures, particularly to the downside, though we have futures lower on both sides of the Atlantic. This is to do with the Nvidia boss, Jensen Huang, saying that $100 billion commitment to OpenAI, that investment, was never a commitment. So this is a nervous Monday that you're looking at. The risk events on the docket for the week include two central bank decisions here in Europe on Thursday, one from the European Central Bank, another from the Bank of England, both expected to hold rates in their first decisions of the year. But how is that recent euro strength, reversing as it is this morning, going to impact the rate path for the ECB? On Friday, we've got the jobs report stateside, and you know whose view we want on that, Kevin Warsh's, even if he isn't quite yet the Fed chair. Let's set you up for the day and the week ahead. We begin in Asia, where stocks have tumbled the most since November, with worries over AI funding and a slump in precious metals driving the risk-off mood. For more, let's go to Winnie Xu in Hong Kong. Winnie, what's happening where you are?
Yeah, morning, Lizzie. It is quite an ugly day in Asia today. In fact, you're talking about the MSCI Asia headed for its biggest two-day decline since April. That was, around that Liberation Day. And we're seeing leading losses today. That it's the technology shares on the board. You can see that the MSCI tech index is in fact down about 3%, with benchmarks in South Korea and Taiwan leading losses. We're talking about the Kospi down some 5%, and that is also coming after, like you mentioned, cautious comments from Nvidia's Jensen Huang, and also volatility spiking up to the highest since 2020 for the Kospi. Now, we're talking about the overall strength in the dollar, and as you see, that's also weighing on the overall strength of local currencies. But you flip the board and take a look at, actually, we are seeing an outlier when it comes to the Chinese yuan. In fact, Chinese yuan offshore and onshore both strengthening against the dollar, and that's coming after private PMI data showing the strength in exports, and also PBOC setting its strongest, it's fixing stronger than market expectation, first time since November. But overall tech space is still very weak. You can see HS Tech here down about 4%, with also the drag from the EV sector. Here, BYD is down about 8%, coming after some weakness when it comes to the January sales number. However, you also flip a board and take a look at what's going on in the Japanese market, because yes, we have that a bit of a sell-off when it comes to the topics and the Nikkei 225, but you can see it's actually outperforming the overall regional benchmark, and that's coming after how the weak yen is actually supporting stocks here. So the yen here, we're seeing a little bit of a weakness, helped by Takaichi's comments on how the weaker yen is actually beneficial for exporters, and it's helping investors to trim their expectation for the government to potentially come in with currency intervention. Back to you, Lizzie.
Really, thank you. That's Winnie Xu in Hong Kong. And it looks like that sell-off on stocks is going to go right around the world, from Asia through Europe and into the US session as well. Nasdaq futures lower today as concerns mount around that AI hype bubble. It follows comments from Nvidia CEO Jensen Huang, who said that his company's investments in OpenAI may not be as big as previously expected.
Sam is closing the round, and we will absolutely be involved in
How much? Can you say how much? Can you say how much?
We will invest a great deal of money, probably the largest investment we've ever made.
The large?
Yeah.
So is that going to be over 100 billion?
No. Nothing like that.
Let's bring in Bloomberg MLive strategist Mark Cranfield now. It is a big week for tech, Mark. We've got Alphabet and Amazon reporting earnings as well. Could we be nearing the peak of the AI hype?
It's certainly, the risk is becoming greater and greater. One of the things which has been driving the whole AI story over the past year in particular is these two huge private companies, OpenAI and Anthropic. They're both heading towards IPOs. At the moment, the talk is somewhere around the fourth quarter of this year. And every time they do a funding round, the valuations go higher and higher and higher. Most recently, OpenAI is thought to have an implied valuation around $800 billion US. Every time it starts to creep higher, it fuels more speculation in the market, more hype for the whole AI story. Suddenly, Nvidia may have capped the whole thing by suggesting that they might not invest as aggressively as originally thought. It will start to get other people questioning it, and maybe the best has been seen for OpenAI. That may also spill over to other companies, and if that's the case, a lot of valuations will now start to be questioned. All that fuel coming out of higher and higher valuations may start to seep away. You've also today got a story that Oracle is looking to raise around another $50 billion for data centers related to AI. Well, the timing of that is not particularly good. If you look at the way the markets are responding today, it's going to be a much tougher sell for them than it was just a week ago. So those things are feeding on one another, but certainly the risks are becoming much clearer that possibly the peak has been seen for the enthusiasm of AI valuations. And this week, you've got Alphabet and Amazon coming to report, and people will be watching that very closely.
OK, meanwhile, the other moves we've got to talk about, Mark, are, of course, these massive moves in metals. Could it be that the debasement trade is now on hold?
Well, possibly, but the questions are really here about P&L survival. So what you're seeing here is just a spillover where huge positions have been built up in the precious metals, particularly in silver and gold. You saw that especially driven by what's happening in China. Bloomberg has reported extensively on the futures market, especially where prices in silver and gold in China were way much higher than they were on the relevant markets in the rest of the world. Enormous turnover, a lot of retail people involved in that, as they have been in the silver ETF in the United States as well. Those people are beginning to unwind. Now, a lot of the same traders will be involved in precious metals, in tech themes, possibly even in currency themes as well. All of that is starting to pare back. People losing money in one space have to quickly rush to close positions somewhere else. It's a domino effect. It's even engulfed oil today. Not so much because of the Iran situation, more because positioning into the weekend was very long in oil futures contracts. People are having to unwind those positions because they're cutting out somewhere else. We're finally seeing a bit of a bid in the Treasury markets today, a little bit of a haven play there. Not extreme, but we are beginning to see some defensive action in terms of Treasuries. It's a clear sign that people are getting very panicky. Whether the debasement trade comes back or not, it will take a few days before we see that. But for the time being, it's a question of sell first, ask questions later.
OK, Mark, thank you. We await core trading for gold at 7 a.m. London time at the end of this programme. But for now, Bloomberg MLive strategist Mark Cranfield, we thank you. Well, of course, those moves were partly massively triggered by the US President Donald Trump selecting Kevin Warsh as the next Fed chair, shifting the debate from short-term rates to the Fed's balance sheet and its role in markets. For more, I'm joined now by Bloomberg's Asia government editor, John Herskovitz. John, does it look like Warsh is going to make it past Senate confirmation? And should markets actually be focused more on his view on the balance sheet than rates? Good morning.
Sure. It looks like any blockage that will come in the Senate is going to be procedural and not political. We have some prominent senators, specifically Tom Tillis, who is saying that he won't go ahead with the approval of the nomination until the Justice Department investigation of Jerome Powell is over. The head of the Senate Banking Committee, Tim Scott, said he sees a timely procedure hearing for this. So it looks like it will get through in the Senate. The votes are there. It may be delayed for the start of the process, but the markets are, of course, always worried about who's going to be leading the Fed. The comments about the balance sheet expansion have caused some jitters in the market. We saw that after Warsh was nominated, long-term rates started to go up, and there's the worry that if he if he really takes a look at the balance sheet, that we could see more pressure on longer-term rates, and this would give him less wiggle room to move with cutting short-term rates. So he's also had a bit of a loggerheads with the Trump administration, which wants to see borrowing costs go down, and Trump himself has been pushing for very steep cuts in the Fed rate as soon as possible. So lots ahead, lots to keep the markets interested, but politically, things seem to be on track for the nomination.
OK. Meanwhile, John, what are the chances that a deal is going to be approved in Congress to approve funding and end the shutdown that, of course, started on Saturday? And what are the risks that are in the way?
Sure. We've gotten some optimistic comments from House Speaker Mike Johnson, who says he sees this passing by Tuesday. If it's approved by Tuesday in the House, it could become law as soon as that day, restoring the funding and getting the operations going ahead. Some Democrats are digging in. The deal itself would kick the can down the road for 2 weeks for DHS, Department of Homeland Security funding. And getting this funding renewed or getting this in order really looks like it'd be contentious. We have Democrats digging in their heels. They want to see changes about the way that ICE goes about its use of force. Dramatic changes. Republicans see this as red lines. So if this deal goes ahead, 2 weeks down the road, we could see a really contentious battle with the funding for DHS. Yeah, optimism on the Republican front, but troubles down the line. And we've seen these government shutdowns play out again and again. There's always a lot that goes in, and a lot always goes down to the last minute. But Tuesday is the day for Johnson, and we'll see what happens after that.
We look ahead to that tomorrow. John, thank you for the update. That's Bloomberg's John Herskovitz. Well, still to come here on Daybreak Europe, we'll be looking ahead to the ECB's rate decision, that, of course, on Thursday, and the impact of the Euro rally, reversing somewhat, though, as it is. That conversation coming up with Nomura's European economist Josie at 6:30 a.m. London time. But first, Iran's supreme leader warns of regional war if the US launches military strikes. We'll get the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's just gone 6:15 a.m. in London, and we're looking at oil lower 5% at $65 a barrel. This after it notched its biggest monthly gain since 2022. So quite the reversal after US President Donald Trump said Washington is talking to Iran. Now, it comes as the Iranian supreme leader warned of a regional war if the US follows through with strikes on the Islamic Republic.
This gentleman regularly says he brought warships. The Iranian nation will deliver a firm blow to anyone who attacks or harasses it. The Americans know that if they start a war, this time it will be a regional war.
Why wouldn't he say that? Of course he would say that, but we have the biggest, most powerful ships in the world over there, very close, a couple of days, and hopefully we'll make a deal. If we don't make a deal, then we'll find out whether or not he was right.
To make sense of it all, let's bring in Bloomberg's Jomana Basechi from Dubai. Jomana, they're the verbal attacks. You heard the two sides there, but how high actually are the military tensions between the US and Iran today?
Well, I think today is perhaps a very different circumstance or set of circumstances than where we were on Friday when you had oil trading closer to $70 and perhaps the real possibility of military conflict over the course of the weekend. But things seem to have turned, judging by the price action today. And the window for diplomacy, once again, seems to be opening up. Of course, we did just hear those comments from the Supreme Leader, the Ayatollah there, threatening the U.S. that if they did strike Iran, that it could open up the possibility of broader regional conflict. President Trump quipped on the back of that, of course he would say that, but that he is actually hopeful of a deal. And we know over the course of the last couple of weeks, the U.S. have been building up what President Trump has described as an armada of military assets around the Arabian Sea, perhaps to provide some deterrence. But over the weekend, diplomacy has been playing an active role. We know that the Egyptian president held a call with various leaders in Iran. The Qatari Prime Minister and Foreign Affairs Minister also actually paid a visit to Tehran. He met with the head of the National Security Council, Ari Larijani, who's very close to the Supreme Leader. And after that, Mr. Larijani put up a post on X saying that a framework for negotiations had indeed been agreed to. We don't know at this point, Lizzie, what the terms of those negotiations are going to look like. From what we know from prior discussions, that the U.S. obviously have been pushing for a zero enrichment policy, obviously no nuclear weapons, but then also perhaps a new element, which is an end to their ballistic weapons program and the seizing of funding of military operations and groups around the region, including the Houthis and Hezbollah. So still very early stages, and it could very much be a situation where the two sides are buying time. But judging by the price action this morning, it looks as though we've walked away from the brink of military action to wait-and-see mode once again.
OK, so traders focused on the diplomacy. But, Jemana, in the background, the OPEC Plus groups decided to keep production levels the same. How significant is that decision for the market?
Well, there was no surprise, really, that OPEC Plus didn't do much. And actually, it was interesting that even in the run-up, when Brent hit $70 last week, with all of that geopolitical premium priced in, their reaction was to stay the course, because at this point, there are still a lot of unknowns as to whether this is going to broaden out into broader regional conflict, whether the Strait of Hormuz could be a target. We've spoken about that many times before, whether we could see supply disruption. None of that has actually happened. And I think as far as OPEC Plus are concerned right now, they would rather keep their chips close to their chest and see how things evolve over the next couple of months. But we still are in an environment where fundamentals would dictate lower oil prices simply because of this mismatch between supply and demand. You have many think tanks out there, including the IEA, forecasting a very huge surplus of oil versus oil supply versus demand over the course of 2026. And that was one of the reasons why at the beginning of this year, you saw oil trade closer to $60 than where it is right now. So some people are saying that actually what was interesting about this OPEC Plus meeting is not what they decided, which is to stay the course for another month, but what they didn't say about the outlook from here onwards, because they don't want to pigeonhole themselves into a certain course of action. What I will say, though, is that they still have perhaps another 1.3 million barrels per day that they could bring to the market, and many members are indeed pushing for them to resume once again bringing those extra barrels to the market again. So we have to see how this all plays out. But today, the reaction in oil is perhaps reflective of the fact that some of that geopolitical premium is being priced out.
$65 a barrel at the moment. Bloomberg, Jemana Basachi, thank you so much. And Jemana, of course, will be back with Horizons Middle East and Africa at 5 a.m. London time. Now, let's get to some other top geopolitical news we're following for you this morning. The Ukrainian President Volodymyr Zelensky says that the next trilateral meetings between the US, Russia and Ukraine will be held in Abu Dhabi later on this week. It comes as Vladimir Putin's forces continue to strike Ukraine. On Sunday, more than a dozen people were killed when a Russian drone struck a bus transporting workers in central Ukraine. Elsewhere, Peter Mandelson, Britain's former ambassador to the US, has resigned from the UK's ruling Labour Party to avoid causing it, quote, further embarrassment after the latest revelations about his links to the disgraced financier Jeffrey Epstein. Mandelson is facing questions about payments totalling £75,000 made to him and his partner by Epstein in 2003 and attempts to stop the UK from introducing a tax on bankers' bonuses after a request from Epstein. Prime Minister Keir Starmer also, meanwhile, says that he still wants the UK to join the European Union's flagship $150 billion euro defence fund. The EU rejected the British bid for its defence companies to be able to benefit from the fund back in November, with the two sides disagreeing over how much the UK should pay to take part. Well, those are some of our geopolitical top stories this morning. But coming up right here on Daybreak Europe, as silver and gold see the biggest plunge in over a decade, we'll be looking at the potential impact on the global energy transition. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:24 a.m. here in London. And let's check in on this bloodbath in precious metals, base metals as well, really triggered by President Trump's nomination of Kevin Warsh to lead the Federal Reserve. But the extreme move started before that. So this morning, you're looking at copper extending its slump as traders debate whether these bullish investors in China might start buying up again after the tumultuous few days we've seen. Also seeing steep declines in aluminium, tin and nickel. But look at gold here, down 8.6%. It's already had its biggest plunge in more than a decade. Silver extending the dramatic reversal of that record-breaking rally that ran too far, too fast. So silver there at $73 a tonne, down 13.9% right now. But let's dive into the metals picture now. And we have seen, as I say, gold and silver seeing the biggest plunge in over a decade following the recent highs in recent weeks. But what's the potential impact on the energy transition, which, of course, is heavily reliant on coppers and other commodities and on the miners that supply them? I'm joined now by Bloomberg NEF's metals and mining analyst, Ellie Gomes-Callus. Ellie, good to have you. How important are metals to the energy transition? Crucial context.
Put simply, the shift to the low-carbon economy cannot happen without metals. At BNF, we estimate that the energy transition-related demand in metals is going to jump around 50 million tonnes between today and 2030. And that's largely down to the industrial metals, so aluminium, copper, steel. These are the fundamental basis of lots of clean energy technologies, from EVs to wind turbines to grid networks.
And how do the moves that we've been seeing impact the energy transition then?
So these metals act as raw materials for technology manufacturers. So when copper prices go up, it means that the manufacturing of EVs and the wires for grid networks is also more expensive. But at the end of the day, these companies are not charities. So we need to ensure that moving forward, they're able to do two things. First, either go to innovation to help reduce the use of less expensive metal, or these technologies will get a lot more expensive.
And so how are companies actually doing that?
So a really good example of this is in the silver industry. So you've spoken about silver prices. They've risen super high over the past few months. And the solar industry is hit hard by this because silver is a key component in solar modules. So essentially, the manufacturers are moving away from silver usage through technology refinement and optimization. And this means that we've seen the amount of silver used per megawatt of solar decrease by a third in about 2 years. But even though the silver prices are falling, these innovations are really important for the resilience of the industry in the long term.
And so where does it leave the miners?
The miners are actually in a good position. So high prices is great for miners because it means higher revenues, and they can reinvest these profits into new projects, but also expanding the acceleration of existing projects too.
Okay, great to get the bigger picture on a real down day for the metals this morning, as I say. Gold currently down nearly 10%, silver down 14%. And if we check in on this futures picture as well, we're lower on both sides of the Atlantic. But really good to get your expertise there. That's Ellie Gomes-Callus, Bloomberg NEF metals and mining analyst. Well, as I say, we have futures lower on both sides of the pond at the moment. Nasdaq futures particularly lower. We're going to turn to the macro next, ahead of the ECB's first policy meeting of the year this week. We'll be speaking to Nomura's European economist, Josie Anderson. That conversation coming up next. Stay right there. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Metals melt down. Gold and silver continue to plunge, adding to steep losses seen on Friday. Asian stocks and Nasdaq futures slump on concerns around AI funding and valuations. Meanwhile, the dollar holds on to gains after President Trump nominated Kevin Warsh as the next Federal Reserve Chair. Plus, oil tanks as geopolitical risk recedes after the US president says Washington is talking with Iran. If you're just joining us, welcome to the programme. It's 6:30 a.m. here in London. Happy Monday. Welcome to February. And your markets look like this. That metal sell-off continuing this morning. Gold plunging by 8.2%. We are now at $4,493 an ounce. Remember, last week, we were at $5,500 an ounce. So these are sharp moves to the downside. We'd already seen lots of volatility, and it became more and more extreme after the president picked Kevin Warsh to be the next Fed chair. On the flip side, of course, the dollar is a touch higher, and take a look at the futures picture as well. We're lower on both sides of the Atlantic this morning, but particularly to the downside when it comes to Nasdaq futures. And this is after those latest comments from the Nvidia boss, Jensen Huang, saying that $100 billion investment in OpenAI was never a commitment. So a nervous picture in your markets this Monday morning. On the front pages today, let's start off with The Guardian here in the UK. They've got Peter Mandelson, who was, of course, sacked as UK ambassador to Washington last year, resigning now from the governing Labour Party over more revelations about his friendship with the late paedophile financier Jeffrey Epstein. Now, Mandelson said that he wanted to avoid causing further embarrassment. But this is also the story on the front page of the Financial Times this morning. They're leading on emails from Epstein revealing that Mandelson was trying hard to change policy on banker bonuses when he was business secretary in 2009. Now, Mandelson was telling Epstein that the JP Morgan boss Jamie Dimon reportedly should mildly threaten then-Chancellor Alistair Darling over the tax on bonuses. So that story on many of the front pages this morning. But if we flip over to the Wall Street Journal, they're reporting that while many home buyers in the United States have given up on the depressed property market, those who are buying are enjoying the biggest discounts in years. You can get a roundup of all these stories and everything you need to know to get your day going by looking at today's edition of the Daybreak newsletter, which, as ever, terminal subscribers can find by going to DAYB Go. Now, of course, as I say, the Bloomberg Dollar Spot Index is actually recovering this morning. It's up 0.2%. But the broader story, has been dollar weakness and a surge in the euro, which is set to loom large over the European Central Bank's first policy meeting of the year. Now, euro area inflation is at risk of being pushed further lower than the target by this rally in the euro, raising uncomfortable questions for officials convening on Thursday in Frankfurt. To look ahead to it all, Josie Anderson, European economist at Nomura, joins me now. And Josie, I think you expect a hold this week from the ECB, right? How do you think this euro story is going to play into the thinking in Frankfurt?
Yeah, that's right, Lizzie. Thanks. We expect them to remain on hold and also emphasise that their policy path will depend on data dependence and they're taking a meeting-by-meeting approach to decisions. But, of course, a big theme this week will be, has there been an impact of the stronger euro? You know, the euro has strengthened over the course of the past year, and this could possibly lead to disinflation as imports become cheaper, And so this might be a question, particularly as last year De Guindos said over 120 in the euro dollar could be a point where they start thinking about the impacts of it. And so we expect Lagarde to receive questions on this. We actually did an investor survey. We asked at what point do you think euro dollar would cause the ECB to cut? A large proportion, around a third, said 125 would be a key point. Another large share said 130. So we're not at those levels yet. And we don't think that this appreciation of the euro would be enough for the ECB to cut.
OK, so do you think that a hike this year is more likely than a cut?
That's a good question. We don't expect any change, is our overall view. I think what's interesting over the next 6 months is we're likely to see inflation fall below the 2% target because of, well, primarily because of energy base effects. And we have also seen, of course, this effect of the euro. And so in the short term, I think we're likely to see downwards inflation pressures. In the medium term, we actually do see more upwards inflation pressures. This is potentially because of faster growth, leading to, the spare capacity in the economy becoming more limited, potentially, and then also a tighter labour market potentially. So we're not expecting any change in policy this year. Perhaps, looking further into 2027, 2028, that's when a hike becomes more likely.
OK, interesting. I mean, of course, inflation's already undershot the ECB's target, so you do wonder how persistently it would have to undershoot for it to become a problem, this euro strength. But what about if you contrast it with the Bank of England? Will dollar weakness have more of an impact at the BOE than at the ECB, given how open the UK is?
Exactly, that's a key point. The UK is a small open economy, and so fluctuations in the currency can have a slightly larger impact on our inflation. Again, we don't expect it to have had a significant enough impact to change our view on what the Bank of England is going to do. We expect no change in rates this week. We expect the next cut in April. And that's because, inflation in the UK still looks pretty sticky. And there are lots of concerns on the Monetary Policy Committee about fast wage growth, inflation being quite sticky. And so we think they'll need to see more moves down in inflation before the next cut.
And so that stickiness in the labour market is the main issue for you?
Well, actually, in the labour market, we're starting to see more signs of loosening, with the unemployment rate rising to 5.1%.
So what's causing the stickiness?
Well, services inflation, I think, is a key issue for the Monetary Policy Committee, and that's because despite, some slight loosening in the labour market, as I mentioned, wage growth still looks a bit sticky. We do expect that to slow, particularly as we have seen this faster loosening in the labour market than we really expected. But, for the BOE this week, we think because they cut it, in the last meeting in December, it would be too soon for another cut this time.
What about the impact of trade? Of course, we've had President Trump's renewed tariff threats in 2026. I know they've been walked back, but it feels like there's trade uncertainty again. Is that going to weigh on growth, both here in the UK and in Europe?
It certainly has the potential to. As the latest, trade spat resolved pretty quickly, I don't expect that to have had a really noticeable effect on economic activity, but it can. All uncertainty can impact business demand, potential for businesses to invest if they're not sure what the future is going to look like, and also consumer concern in the UK in particular, and also actually in the euro area. We've seen an elevated savings rate ever since the pandemic, and that leads to less consumption growth because people are keeping it in their pockets. And so anything that causes households to become more uncertain can lead to slower consumption growth, and consumption is the main part of GDP, so therefore slower economic growth. So we're expecting a lower savings rate, but all uncertainty could add to the potential that savings remained elevated.
And whether or not there are more tariffs, there's also still the question of Chinese trade diversion, right? Could we see divergence in the inflation picture across the euro area because of that, and also because of how much divergence there is when it comes to fiscal spending?
Yeah, of course. And I mean, potential Chinese goods dumping is one key inflation risk, downside inflation risk that we are looking at across the euro area and UK. So that is another element that is a risk to our inflation forecast as to the potential for a rate cut. Again, it hasn't. There's not enough to shift our view of exactly what the ECB and the BOE would do, but trade diversion is a potential for that. You asked about fiscal. On the fiscal side, I mean, in the UK, well, actually, one inflation impact is the impact of the budget, which is actually going to quite rapidly, the BOE thinks, bring inflation back to 2% this year. But then, of course, when we look at next year, we have to look at how that might work out in the quarter when that comes out of the base effect. So that is something to look at as well. And then we've got fiscal tightening in other countries like France, but then a fiscal boost in Germany, which we're quite excited about. We're not concerned about the inflation impacts of that because it does look like there's quite a lot of spare capacity in the German economy. So we think that can be used up in the fiscal boost.
OK, really helpful to get your look ahead there, Josie, to those rate decisions later this week. That's Josie Anderson, European economist at Nomura. Thank you. Well, let's check in on these markets. And starting off with metals, as I say, we've had quite the meltdown when it comes to both precious metals and base metals. So you're looking at gold nearly down 10% at the moment. Of course, this started on Friday. We had the president choosing Kevin Warsh as the next Fed chair, thought to be more hawkish than some of the other candidates, lifting the dollar and tanking gold, although we had already seen quite a bit of volatility in these markets already. Silver here down 15.8% at $71 an ounce at the moment. And copper as well on the LME down 5.6%. And so these moves not just concentrated when it comes to precious metals, but also leaking into copper as well. Of course, we'd seen a huge climb last week on copper, but now extending its slump because traders really are debating whether the bullish investors in China might start buying again after the tumultuous few days. And it's spreading not just into copper, but into aluminium, tin and nickel as well. Well, if we check in on the futures picture, we have futures lower on both sides of the Atlantic too. We're looking to be down 1% on Eurostoxx 50 when that market opens, and we have futures lower stateside on S&P E-minis and Nasdaq futures, but lower on Nasdaq futures. Even more so because of these comments from Jensen Huang, the Nvidia CEO, of course, saying that that investment into OpenAI isn't a commitment. So is the AI bubble hype nearing an end? We shall see. Just finally, if we check in on Bitcoin as well, we are down 1.5% to $75,292 a token. So there isn't really a part of the market that isn't touched by all of this morning. But coming up, Disney moving closer to naming a successor to CEO Bob Iger. We'll turn to the corporate news next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to your top corporate stories this morning. The board of Walt Disney is said to be close to promoting theme park division chairman Josh D'Amaro to the role of chief executive officer. It's understood a vote will take place in the coming weeks. The 54-year-old has led the unit that delivers most of Disney's profits since 2020. If approved, D'Amaro will succeed Bob Iger, who ran the world's largest entertainment company from 2005 to 2020 and returned as CEO in 2022. Elsewhere, Bloomberg understands that Alphabet's autonomous driving unit is aiming to raise about $16 billion in a financing round. That would value Waymo at nearly $110 billion. Sources say that Alphabet will provide about $13 billion, while the rest would come from outside investors, including Sequoia Capital, DST Global and Dragonair Investment Group. And BYD shares are falling after the EV maker reported a 30% drop in sales in January, delivering just over 210,000 vehicles. International shipments, an increasingly important part of BYD's strategy, fell 25% month on month. Analysts still expect BYD's total sales to rise to more than 5 million units this year, up from 4.6 million last year. Well, those are some of our top corporate stories this morning. But switching back to another top story, and that, of course, is the Fed. The former Atlanta Fed President Dennis Lockhart says that Kevin Warsh could face early committee tensions with rate cuts uncertain, but one later this year possible. Now, Lockhart told us that Warsh is seen as a hawkish view on inflation and the Fed's balance sheet, but his ultimate approach may remain data dependent.
You know, his history is that of being somewhat hawkish, both in terms of inflation vigilance and interest rates, as well as the balance sheet. And he continues to talk about reducing the balance sheet and reducing the footprint of the Fed in markets, which is, of course, would be interpreted as tightening. At the same time, he's been aligned with President Trump in the White House in recent remarks. So it's not clear to me which Kevin Warsh will show up in May. I think probably he will be data dependent and with the committee will make the best decision he can.
Given that there are 12 voting members on that committee, how significant is the influence of the Fed chair, and what do you expect to be sort of the direction going forward in the next 12 months?
The Fed chair enjoys a great deal of deference from other members of the committee. And in my experience, when it's a close call, the chair's preference often prevails. Having said that, a new chair has to earn the respect of the committee. And so I think he's going to have a honeymoon period. And during that period, he'll be trying to conduct himself in such a way that reassures the committee that he's going to be independent. And we'll see how that plays out. I think Kevin Warsh will be navigating some tensions and some conflicting views on the committee. So it's not an easy road for him in the first few months.
On the data front, there's talk that we could see inflation creeping back up. Certainly from the likes of PIMCO, that seems to be their assessment. Is there a chance that we don't even see a cut this year?
Always a chance, particularly when you're looking forward early in the year. There's so many months ahead of us that it's very difficult to predict. My personal view is no cuts in the first half, but maybe a repeat in the second half of some cuts that look a little bit like the last 2 years. But that's just speculation at this point. It will depend on how the economy evolves. And we have both elements of the dual mandate, inflation and employment, showing a trend, but not a trend that could not be broken by new events. So it's very hard to predict, I think, at this stage. One more cut is a reasonable and plausible assumption, I think.
Former Atlanta Fed President Dennis Lockhart speaking to our colleagues Sherry-Ann and Avril Hong. Well, it's going to be a bumper week for European results this week. Firms reporting from different sectors, and we're going to be hearing from many of the big banks, with numbers already showing a lower net profit from Julius Baer this morning. Let's talk through it all now with Bloomberg's Chloe Melly. She joins us for a preview. Chloe, we're going to talk about banks in a moment, but just first of all, I want to start with Novo Nordisk, really in the spotlight. What are we expecting from them this week?
Yeah, it's quite an interesting and quite complicated time for Novo at the moment. 2025 was quite difficult. There were a lot of setbacks of drug trials, a lot of competition, and also some leadership turmoil. And so this is going to be really the focus for the results. Is going to be about reassuring investors that 2026 is shaping up to be better than 2025. But the guidance is likely to be quite conservative and quite broad because there are still quite a lot of unknowns for Novo this year. There's unknowns around the uptake of Wegovy, which is obviously the weight loss drug in markets that are outside of the US. There's questions around the impact of lower prices of GLP-1s across different markets. And then the big question is going to be around the obesity pill, which is supposed to come out this year. And is that going to perform well? Is that going to be able to provide that next leg of growth, really, for Novo? So there's a lot of uncertainty, a lot of unknowns. And what Novo needs to do is reassure investors at the results this week.
OK, I'm just looking at these Julius Baer results reporting at the top of this hour. Lower net profit and stabilising client inflows in 2025. Of course, they had the new CEO, Stefan Bollinger, starting that revamp of the wealth manager. But, Chloe, we've got European banks reporting this week. Could really dominate this week. What are you looking out for?
Well, the main one really is going to be UBS later this week, with the main theme here is going to be around the Swiss government imposing those capital requirements on the bank, and what impact is that going to have on shareholder returns for UBS. And the latest on this is that the Swiss government expects UBS to be forced to accept most of its demands. So that will be really a key theme, and that could potentially, of course, be a negative. And then on the positive side for UBS is going to be trading. Of course, we've seen Wall Street banks report a really bumper fourth quarter when it comes to that trading revenue. Deutsche Bank also had really strong fixed income trading revenue. And so for UBS, but also for BNP and Société Générale, which are also reporting this week, this trading revenue is going to be really in focus. And then for the French banks, so BNP and SocGen, there's a lot of questions around the fiscal and political uncertainty that we are still seeing in France, and the potential impact there as well.
OK, Chloe, thank you very much. That's Bloomberg's Chloe Melly. Plenty more still to come. This is Bloomberg.
I think it's a relief that Trump selected Kevin Warsh. Yes, he was a hawk for a period of time when he was a member of the Fed.
It's not so much that he's hawkish, it's that he's always hawkish and always, typically when he's wrong in the same direction.
And he has become less hawkish over time. But I think it's probably going to reassure the markets.
It seems like he would be amongst the 4 candidates that were under consideration, the less likely to be interventionist on the balance sheet.
I mean, what you want in these positions is someone that has an open mind, that's a flexible thinker. So I think his newfound dovishness looks very suspicious.
It's going to take some time for Kevin Warsh to effect a plan of action that tries to engineer lower rates.
Some of our guests reacting to President Trump's decision to nominate Kevin Warsh as Jay Powell's replacement at the Federal Reserve. If you take a look at the market impact, it sent the dollar up the most since May, so capping off a volatile January. You can see the Bloomberg Dollar Spot Index here in the white line, and that setting off a bloodbath in precious metals. So flip the board over. We can take a look at the moves when it comes to silver, dropping 26% on Friday. It was the biggest on record and dropping $40 an ounce in less than 20 hours. So many had warned that a correction was coming, but the speed of this move, something of a wake-up call for these markets. Now, contrast that with what happened in gold. Flip the board over. You can see the fall in gold here, the biggest in a decade, but still it left gold at above its average over the past 20 days. But let's take a look at what's actually happening in these metals markets this morning. The bloodbath continuing, as we can see here. So gold is down 8.15%, $4,494 an ounce. Remember, it was at $5,500 an ounce last week. Silver here at $73 an ounce, down 13.3%. And it isn't just the precious metals. Base metals tanking as well. Copper down 4.8%. So pairing some of the earlier losses, it was down 5% earlier in the session, but still red across the metals screen. Now take a look as well at the stock futures picture. We have got futures lower on both sides of the Atlantic here. Euro Stoxx 50 futures down, S&P E-minis down, but pronounced moves when it comes to Nasdaq futures after those comments from the Nvidia boss Jensen Huang saying that $100 billion investment in OpenAI was never a commitment. And it's likely that you'll see these moves playing out when it comes to ASML here in Europe, and all of those moves when it came to the metals, also seeing Glencore indicated lower on TradeGate as well. Big week for risk this week. We've got 2 central bank decisions on Thursday and the jobs report stateside on Friday. Plenty to discuss on the opening trade next. Anna, Guy and Tom will take you all the way to the open. Anna's not here. Guy and Tom, this is Bloomberg.